All right, guys, today I'm going to show you how you can compare estimates from different lenders to figure out who's giving you the best rate. Now, let's be honest, when you look at loan estimates in the mortgage world, they're confusing. If you're a first-time home buyer, they're almost impossible to interpret, to figure out which is the best deal. Why? There's all kinds of different fees that lenders call different names. And at the end of the day, one has lower fees, but one has a higher rate. So it's really hard to figure out who's giving you the best rate. Well, I'm going to show you how to do it. And once I walk you through it, you're going to see how simple it is. But you've got to know these few things in order to make sense of these estimates and to know who's giving you the best rate. So before we jump into it, I'm a licensed loan officer. If this is the first time you've watched us or you've watched us before, I just want to say thank you for finding us. I hope this information I'm about to share is helpful. So let's jump into it. When you're looking at interest rate quotes from different lenders, you're looking at a document called a loan estimate. That loan estimate is going to have a whole bunch of information on it. And I'm going to tell you most of that, when it comes to comparing and figuring out who's giving you the best rate, most of that information is actually irrelevant. I'm going to show you how to isolate and focus on the little bit of information that really matters so you can figure out which interest rate quote is the best for you. So first thing you want to do, this is going to sound so simple, you guys, but it's super important because if you miss this detail, everything else can be off and it won't matter. You want to make sure that on the loan estimate, you're comparing the same loan program, okay? For example, a conventional 30-year fixed. You want to make sure that all the loan estimates are based on a conventional 30-year fixed. You don't want to compare a conventional 30-year fixed with a VA 30-year fixed. You're going to have different interest rates for different programs. You don't want to compare a fixed rate with an adjustable or an ARM. So just make sure that those programs on all the estimates, it's the same loan program. And guys, it's listed right there in the upper right-hand corner of the estimate. So not hard to find. Make sure you've got the same program. Next, you want to look at the interest rate. You just want to take note of where the interest rate is. Now, if you have 5 estimates, chances are you're going to have 3 or 4 different interest rates. It should be within an eighth or a quarter of a point of each other. But you don't want to stop there and say, well, I found the lowest one. This is the winner. Let's go this way. Just take note of the interest rate. Now, this last step is really where you figure out who's giving you the best interest rate and make these apples to apples comparisons. There's all kinds of sections on the loan estimate for different kinds of fees. You've got a section for lender fees, title fees, other fees, third-party fees, prepaid taxes and insurance. So you've got all kinds of numbers on there. You want to ignore all of those except for the origination charges. Those are your lender fees. So you want to take note of the rate, and then you want to look at the origination charges. Guys, that's how you're going to figure this thing out. Inside the origination charges, you're usually going to have a couple categories of fees. You're going to have maybe some admin fees, which go by all kinds of names. Maybe admin fee is one of them. Underwriting, processing, broker fee, application fee, all kinds of different fee names. Guys, let's just be simple here. This is a source of revenue for the lender. Now, I'm not saying it's sneaky. They've got to make money to do a loan. And this is just part of a revenue model for all lenders, some kind of administrative fee. But you just want to be aware of it and be aware that it goes by all kinds of different names. So you've got the admin fee that we just talked about. Then you've got points. You're going to either see origination and or discount points. These are fees that are charged as a percentage of your loan amount. You want to look at these fees to see how much you're being charged for the rate that you're being quoted. In fact, you want to look at the totality of all the fees, admin fees and points, and then look at your interest rate. Guys, a lot of lenders will charge higher fees on their disclosure to show you a lower rate. And that'll make the rate look sexy, but you've got to realize every lender can charge points to buy your rate down. So this is kind of the crux of this whole video. You want to get your lender estimates to be like kind or apples to apples. How do you do that? There's a couple of ways. One, you can request a par quote from everybody. A par quote is an interest rate quoted without any origination or discount points. Now, sometimes that's not possible based on credit score, occupancy, if it's an investment property. There are some scenarios that you can't get around paying points on. But first is get a par quote. That means no points. And then what you'll have is you'll have the par interest rate and the admin fees, and that's it. And that's what you'll be able to say, okay, I'm going to set these different estimates next to each other and I can compare them because I've whittled it down to a par quote where there's no points skewing the number. The other way you can do this, guys, is you can ask everybody to say, okay, what's your interest rate? Send me an estimate. with 1% origination fee, or whatever number you want to choose. But you've got to get everybody on the same page, all the lenders on the same page with regard to how much they're charging you in terms of points. And then you're going to compare the interest rate and the fees, okay? So if the points are the same, either 0 as a par quote, or they're all at 1, either way, if you get 4 estimates at 0% origination and discount fees, you've whittled it down. You've done the hard work. You can just look at interest rate and admin fees. Okay, this one's the best rate. Now, at that point, you can still buy your rate down, but this is for the sake of comparing. Now, if you're planning on buying your rate down, guys, I would suggest asking for quotes based on buying it down, because you want to see where every lender is at with, say, a 1% origination or a 1% discount, whatever scenario you're trying to buy down in. But get everybody to have the same fees. And also, side note, make sure your loan amount's the same. If somebody's quoting you at 5% down and somebody else is quoting you at 10% down, you're going to have issues for a number of reasons, and they're not going to be apples to apples. So make sure that your loan amount is the same on all of those estimates. And if you can do these things that we've shared in this video, guys, you will be able to whittle it down and figure out which of those interest rates is the best. Remember, you get rid of all the other fees except for the origination fees. All that other stuff doesn't matter. That's part of the transaction, but it's not part of where your interest rate comes from. So let's recap, guys, real quick. This is how you compare and make sure you're getting the best interest rate when comparing loan estimates from different lenders. Number 1, make sure that the loan program is the same on all of them. Very important. Number 2, I actually forgot to put this up front. I put it at the end, but make sure your loan amount is the same across all estimates. Super important. And then number 3, you're going to look at the origination fees, the discount fees. You want to make sure you get everybody to quote you the same fees, whether it's a par quote, which means no origination, no discount, or everybody charges you 1% in origination, or whatever the fee structure is. Make sure the points are the same across all the estimates, or you can't compare the interest rate on all those estimates. And then the last step is, when you've got those fees all matching as far as being like kind, you look at your interest rate, you look at your fees, and it'll stand out. This lender's the best, this is the best quote, and you'll know you're getting a great interest rate. Guys, I hope this was helpful. Thanks for taking the time.